Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, we're just going to do a news update, a news overview on the current Bitcoin's future ETF that's slated to come out next week, and a little bit of news in China since we've made some calls on Alibaba and a couple of the China stocks. You're going to want to watch this video. So big news for crypto traders. They kind of got what they wanted in a halfway, I guess. They got their ETF, but they wanted an ETF that wasn't connected to futures, instead directly to the spot market. So the SEC is slated to approve this. It still can be denied, but they're saying that more than likely it's going to get passed by the SEC. So this is going to be the first Bitcoin future ETF set to begin trading next week. It'll be under ticker symbol BITO. And this is pending that the SEC objects or doesn't object. And these contracts, they'll be traded on CME. So like I mentioned, this is a partial victory because the crypto community, they want an ETF that tracks with the spot market as opposed to tracking on futures price. So a few things we have to go over so we can fully understand the difference here between futures and options. So future contracts need to honor the agreement and buy and sell shares at a predetermined future date, hold high amount of risk. Buyers are obligated to abide by the contract norms, and sellers are also obligated to sell at the decided price on the decided date. Investors only have to pay the commission rate. Both gains and losses can be unlimited, and shares need to be bought and sold at a predefined date. With options, it allows the investor to buy or sell shares at a predetermined price before the end of the contract. Risk is limited to the premium paid by the investor. So when you buy an option, it has a premium. Let's say you buy a strike price at whatever price and it costs you $2. Well, you multiply that 2 times 100, so you'll be paying 200 because that contract represents 100 shares, and that's your risk. No obligation, and buying is solely at the contract holder's discretion. Seller has to abide by the buyer's purchase decision. A certain amount of the total sum is paid as a premium in advance. Losses can be restricted, but profits are unlimited. Transactions can happen anytime before the contract expires. So the futures ETF is going to be based off of future contracts as opposed to the Bitcoin itself. And crypto community, they've been trying to get this Bitcoin ETF going since 2013, and it's pretty much been rejected every year. But I do believe that this small victory will bring a lot of hype. And one of the main reasons that the ETF that they're trying to push keeps getting rejected because SEC Chief Gary Gensler says he's reluctant due to the price of Bitcoin and its wild prices. Like when China news or a tweet, it sends that news that the Bitcoin spiking, and he's not crazy about the wild prices that are connected with Bitcoin. Some of the companies that are likely to trade future ETF or future Bitcoin ETF are going to be Invesco, Valkyrie. So these are some of the companies. VanEck, they've already applied to be able to sell this future ETF. So this is a small victory for the crypto community. It will bring a lot of hype. Bitcoin future ETF is regulated, and it allows investors to indirectly participate in the Bitcoin market. So what's the difference between an ETF and a mutual fund? So mutual funds, you buy them and sell them through the mutual fund company or broker end of the day. ETFs, you can buy them on an exchange intraday. So if I wanted to buy the SPY the same way I would buy any ticker, I just type in SPY and I can buy that ETF. Mutual funds are typically published quarterly on a 30-day lags. Fund holdings published daily on ETFs. Minimum investment may have a high minimum for mutual fund. You can buy one share of an ETF. It's transparency of trading costs, cost of inflow and outflow. So ETF, what you buy is pretty clear. It's right there, the price. There's more tax efficiency to ETFs. Expense ratios are generally higher with mutual funds and generally lower with ETFs. And ETFs represent an underlying basket as opposed to a mutual fund, which represent an underlying portfolio. So Bitcoin futures are basically a type of derivative trading instrument where two parties enter into a contractual agreement to buy or sell a Bitcoin at a predefined price at a later date. So how is Bitcoin futures ETF price fluctuate? So it doesn't fluctuate according to what Bitcoin pricing is going to be. It fluctuates based off the demand or sentiment of what they think future contracts are going to be. So if more people are buying positive future contracts, kind of calls in a way, and they think that the price is going to go up, that's what's going to cause the price to go up when the futures price go up. And that's what will cause the future ETF prices to go up. Bitcoin futures ETF price will fluctuate based off the futures. So the more people think that Bitcoin is going to be going up and they start buying those type of contracts, then that'll cause the Bitcoin futures ETF price to go up. So when you get into these contracts, these future contract, you agree to buy or sell a Bitcoin at a particular price on a specific date, no matter the price of Bitcoin. Bitcoin futures, each contract has two sides, has an expiration date, and is affected by future traders. Like we said, if they're betting that the price movement is going to go up, then the future price is going to go up. So there's a lot of examples of different types of ETFs. So there's stock ETFs like the S&P 500, Russell 2000, which captures small caps, the NASDAQ, which captures tech stocks. There, the Dow Jones Industrial Average, DIA. Then there's also by sector like oil, energy, financial, biotech, commodities, which would be crude oil, natural gas, and silver and gold. These are different ETFs. They carry a basket of stocks or a basket of commodities, or they represent a commodity, and you trade the ETF the same way you treat a. So Bitcoin's futures ETF don't track the underlying the asset. It doesn't track. That's the big issue. They want one that tracks Bitcoin itself. But this is going to be the first step. It's going to track the future contract as opposed to tracking Bitcoin itself. So because it tracks Bitcoin itself, you can find a divergence between the price of Bitcoin and also the price of the future contract because of that. So Bitcoin can be up quite a bit, and Bitcoin futures ETF can start dropping if more people start anticipating a drop in Bitcoin and they start buying those types of contracts. Then there'll be a divergence between Bitcoin and Bitcoin futures ETF. So on to some China news. The China Evergrande crisis is still going. It seems there's a lot of blame being put on Evergrande, and that's coming from the China government. China's central bank says that Evergrande's risks are controllable. Because right now, a lot of people are fearing that there's going to be major implications due to Evergrande possibly going bankrupt. There's a lot of articles like this of ghost towns being found because they have so many apartments that were constructed and never occupied. So Evergrande, they were the largest real estate developer in China. They have quite a long history with issues with debt. This is not the first time that they've had issues with debt. Most of its projects aren't in the first tier cities like Shanghai, Beijing. It's spread out across a lot of smaller cities, and they reconstructed and sold 1.6 million apartments in these cities, and these apartments haven't even been built yet. So the government has to find a way to build these apartments and find the money to build these apartments and give them to the consumers that already paid for these apartments. So it's estimated that Evergrande has over $300 billion in debt due, and they state that Evergrande is the world's most indebted real estate company in the world. And just don't owe money to the banks. They owe money to suppliers, banks, large banks mostly, trust companies, and foreign investors. Evergrande is Asia's largest high-yield dollar bond issuer, about 20 billion of bonds outstanding, and they've missed quite a few payments already. Basically, I think everybody's waiting for Evergrande to default, and that's definitely going to have some trickle-down effects. They employ about 200,000 people, but they indirectly help sustain about 3.8 million jobs with all the projects that they have. So they do have a lot of investments that they can liquidate. They have some investments in electric vehicles, theme parks, food and beverage businesses, bottled water, grocery, daily products. So the stance for China is saying that this is going to be controllable and it's unlikely to have some sort of major spillover effect, which I don't really think that that's possible with all that debt and all the people that are not going to be working with the default on Evergrande. And they have over $300 billion in liabilities. And they've also missed their third round of interest payments. It's estimated that they have about 30 million of unsold properties and 100 million properties that have been bought but not occupied, forming those ghost towns that we mentioned before. So everyone thinks that they're on the brink of default, and that's a major concern, especially being that real estate and the related sectors are a massive part of China's economy. And they state that, some analysts state that it accounts for as much as 30% of their GDP. Their Evergrande is not the only developer that's struggling right now. There's been not as many people buying apartments and homes. So there's a lot of developers that are struggling staying afloat in China. And Zhu Lan is the one that came out. He's the director of the People's Banks of China financial market, and he's the one that stated that this is a controllable situation. He also added that they're going to protect individual consumers when it comes to their house purchases and provide financial support for the resumption of construction. So we'll see if they're going to step in and help that way. But they are putting the blame on Evergrande and state that it's due to poor management. So I don't know if they're going to bail out Evergrande. Evergrande doesn't have a bunch of loans from smaller banks. So we'll see. I highly doubt that China is going to bail them out because they're clearly putting the blame on them, saying poor management and stating that this is a controllable situation. How does this affect some of the stocks that people are invested in? Well, you have companies like Vale, which is a high dividend paying stock. They depend on China's developing. They sell a lot of materials to China. I don't think some of the retail stocks and the Alibabas and Tencent are going to be affected by this. So that's a good thing. I mentioned when I made my video and I stated that I was taking a position in Alibaba and Tencent, that there is the macro to worry about. I don't think that Alibaba and Tencent companies that are going to be affected by this. The only change with Alibaba right now, as far as my position, there is a little bit more competition to online sales. There are other companies that are getting involved, but Alibaba is way too big. I think Tencent has their hands in a lot of different types of businesses that are going to keep them around. So my thesis for both of those, Alibaba and Tencent, are still bullish. As far as Vale, V-A-L-E, I'm still bullish. They just paid dividend last week and it was pretty high. So just that alone makes me want to keep my position. I got in at a low price, so I'm still holding that position. And that was just a brief update on a Bitcoin ETF, Futures ETF, and China news. Thank you for watching. Please don't forget to subscribe, comment, and see you on the next video.